Okay, let's switch over now to the commodities market where we examine both the oil and agro products. Okwayemi Oguntade from the financial derivatives market joins us now to take a look at the recent developments in that market. Good morning, Okwe.
Good morning.
Glad to have you with us. The terror attack in Paris, we're going to start off on that note. It seems to be taking a toll on the market. Tell us more about that.
Well, the terror attacks in Paris is really, it's an awful event for Paris and for France. And I'm going to be taking a look at it from the energies market's perspective. So what most analysts in the market are projecting is that if you have this terror attacks, then the president of France has responded to say he's going to respond in like manner. What most analysts are expecting is that this would affect the Middle East region in the sense that Syria is sharing border with Iran, which is one of the top producers of oil in the market, and this might spill over into Iran. But this is highly unlikely in the market. But for me personally, what I think would happen, if anything, from the Paris attack is your demand for aviation fuel. We all aware that Paris is actually a tourist destination, with the Eiffel Tower, with Disneyland Paris. So if you're having this kind of attack in Paris, this is going to definitely affect tourism in the area. And if this is affecting tourism, then it means your airlines are probably going to, the demand for aviation fuel for airlines traveling to that destination is going to decline. So for me, over the long term, I'm projecting within the next 2 months or thereabouts, we shouldn't see too much traffic going towards France, air traffic going towards France, and this will probably lead to a further decline in oil prices.
How is this, taking a toll on commodities, especially crude oil? We're seeing that prices, I think for a while was down, but at the moment we're seeing that it may rise on a short to medium term basis.
Yeah, that's what I just said. What most analysts are projecting is that this will lead to supply disruptions in the Middle East because of the French president has responded that he's going to, respond to the attacks. And what most analysts are expecting is that this would probably lead to supply disruptions in the Middle East, and this would probably lead to, an increase in oil prices. But this is highly unlikely because Syria doesn't actually produce oil. It's actually neighboring countries such as Iran that are producing oil, right? But if you're looking at it from the demand side as well, the demand for aviation fuel in terms of tourism, that is likely to go down, and this is probably going to lead to lower prices for crude products.
Let's look at the agro products. There seems to be renewed a risk aversion following the attack. Still talking about the attack in Paris. How far can this impact go?
If you're looking at it from France is a major producer of corn and wheat as well, and so what most traders are projecting is that this would likely affect the farming activities, especially in the agricultural sector, and so traders are getting risk averse with respect to corn futures as well as wheat futures, so they're selling off these commodities in the futures exchange, and this is leading to a decline in prices of these commodities.
Okay, for sugar, because we talked about corn, but let's take a look at sugar. Traders are anticipating approval for incentives for sugar mills. How can this affect prices, especially in the short term?
Well, in the short term, traders are anticipating that the Indian government is going to provide some sort of incentives for the mills to produce more, and this is encouraging traders to believe that maybe the sugar market is going to get better in the next couple of days, particularly in the Indian market. And so what traders are doing now is they're buying on sugar futures, and this is leading to the increase in sugar futures that we're seeing. There's been an increase in demand for sugar futures in that market.
Is there any likelihood that the prices could drop?
Yes, there's a likelihood that the prices will drop because the market is still oversupplied. But in the short term, prices are going up in the sugar market.
Okay, cocoa has been in an upswing. That has been a very tough commodity. Similar to what gold goes through. Gold hardly moves. However, we're seeing cocoa also on an upswing owing to supply shortage. While sugar has been oversupplied, cocoa has been having a low supply. Now, how far can that also affect the prices, especially for those who use these commodities for the production?
Well, cocoa prices have been going up right from the beginning of the year. There was a period where it started going down slightly, but now it's going back up again because what we have is still a supply shortage from the two major producing regions, being Ghana and Ivory Coast. And what analysts are projecting is that the dry weather patterns that we observed between the month of August and September is probably going to reflect now in the output, because now they are harvesting their cocoa in Ivory Coast. And so what analysts are projecting is that the output that was initially projected would be lower than the actual output from Ivory Coast, and this is what's causing the upsurge in the cocoa market.
Okay, just before I let you go, I'd like us to take a look at some prices, stock prices now of FMCG companies. I'm sure we have a number of them listed on the Nigerian Stock Exchange. We're seeing Nestle, Guinness, Honeywell, Flour Mill, Cadbury, Nigeria Breweries, and Dangote Sugar. Now, my question is that looking at the stock performances of these companies, they are in the red. Yes. They're all in the red, except for Nestle, which is a very high cap stock. They're all in the red. How much of this slide could be as a result of happenings in the commodities markets?
Well, there's really no direct link between the commodities market and the performance in the equities market, and this is because what drives the equity market is basically investor sentiment as well as headline news as well. I mean, if you look at what happened yesterday between Tiger Brands and Dangote Flour Mills, now that's something that would drive movement in Dangote Flour Mills today, because if your major investor is pulling out of
investors feed on this news.
Yes, they do, and this
whether local or international.
Yes. So, and this is essentially what is driving the market, the equities market. But if you want to find a link between commodities and the equities market, then you have to look for an headline that is relating or directly relating these two segments together. For instance, headline news like let's say wheat prices, or let's say the government is going to impose a levy on wheat, or is increasing its levy on wheat from 15 to let's say 30% to encourage domestic production. Now, something like that would affect fast-moving consumer goods equities that are making use of wheat as a major input in their production. Now, that's where you begin to see a direct link. But so far, there's been no
major story that could impact on that. Thank you, Okwemi. Very insightful conversation there, Okwemi. Thank you so much for coming on the program.
Thank you for having me.
Okwemi Oguntade is a research analyst with the Financial Derivatives Company Limited, and she's been talking about the recent developments in the commodities markets. Of course, the Paris terror attack was a key factor that impacted on the markets, and the impact is still ongoing, and we're seeing that that could continue on a medium-term basis. Now, coming after the break, our focus is on the Nigeria energy markets. We will be joined by an energy expert. Please stay with us.